Thank you so much for joining with Christian D. Evans, your host with Journey with Christian D. Evans podcast. And guys, we have an incredible guest that we're going to be sharing with you. And we're just very excited to have him on as a guest. Just share with you just a few tidbits about him. Okay. He has appraised over 2,000 businesses and signed off on assets worth 2.6 trillion with a T in value. He has appraised unique assets like the Golden Gate Bridge, Atlanta Airport, Uber, Airbnb, Yahoo, Brooklyn Bridge, Mirage Casino, LV, among many others. Bharat, which is our guest, is the founder of Aristrat, a company that has helped startup founders and VCs by telling them what their companies are worth. He lives in the San Francisco Bay Area with his family, enjoying sailing, golfing, skiing, and horseback riding. Ladies and gentlemen, please welcome Bharat. Thanks so much for tuning in, man. And I really appreciate your time. How are you doing, man?
Christian, thank you so much for having me. I love your energy. You're like a hydrogen bomb. You're amazing. I love it.
Well, thank you so much as well for tuning in. And I know I totally butchered the name of your company, but let's kind of dive into who Bharat is and kind of where you were to where you are now and where you're going, man. Tell us a little bit about you, bud.
So I've been in valuation a long time. I've been fortunate that I have valued all kinds of interesting and unique assets and interesting and big companies. Most people in my world, they silo themselves and they say, I only value real estate for tax purposes. I call bullshit on that notion because those people do that because that's all they know. That's all they do. I am not afraid to roll up my sleeves and think outside the box. That's why I have been able to appraise the bridges and the tunnels and the airports. And I love education. I love educating people about valuations, especially with the pre-IPO valuations that are happening right now. For example, Rivian, they're asking for $80 billion in pre-IPO valuation. GM is worth less than $80 billion, and GM delivers 7 million cars a year. And they have been delivering for a long time. And Rivian hasn't delivered one car, not one. And they want $80 billion. And market is going to give it to them. So I like to educate people about valuations because I think the next recession or debacle is going to come because of such crazy private company valuations.
Well, let's talk a little bit about that. So why do you say that? And what do you see in the market right now in regarding that subject, valuations?
Because valuations is not a independent data point. It is a data point that is an amalgamation of various other fundamentals, for example, revenue, profit, growth, risk. And it is easy to bullshit about valuations to people who don't know valuations. You just say, oh, they're asking for so much. I'm like, well, help me understand, always peel the onion when somebody says this company is worth that much. Why is it? Well, because, somebody paid $80 billion for them. Well, that makes no sense. Just because some schmuck cut a check, that means nothing, because if that guy's going to lose his shirt, does everybody lose his shirt? No. So you got to go back to the fundamentals. The reason I balked at Rivian, not because I've got anything against them, I got no skin in the game here, but it makes no sense. That means they have zero revenue. How can a company with zero revenue, no profitability, all the liability of employees be worth $80 billion? I don't get it. Maybe I'm just not that smart.
Mm-hmm. That makes sense, and very interesting what you're talking about, because see, I've seen a lot of companies like I think Robinhood, that was a very famous one when they IPO'd. What is your take on Robinhood? Because of course, all the shenanigans that's going on. Do you see that company as IPO'd and valued at what it was, or do you think it was overvalued? And let me ask you a little bit also on that. When you're looking at a company, what helps you identify the good value of that company, if you will? What are some of the key attributes?
The real problem, Christian, is when companies are starting out and they go from startups to emerging companies to pre-IPO companies, the basis, the fundamentals of valuations are very different, because these VCs are trading these companies like trump cards. They're just exchanging cards sitting on a table, and then, okay, this company raised 300 million, next round they got to be at 900 million. That's just what we need to do to double our money, because VCs need to double their money at each inflection point. Unless they're doubling their money, that company is not raising money. And this is a trick that most retail investors don't understand. So it doesn't matter to the VCs if the retail investors are making money, so long as they are double downing each time and they're doubling their money at each inflection point. And at the end, if it turns out to be an $80 billion valuation pre-IPO, so be it, because after they've gone IPO, it's the SEC's problem.
Mm-hmm. Mm-hmm. So let's talk about like a specific company that you see right now that you think is overvalued. And let's kind of dial in. Why do you think that is? And what helps you identify when you're doing valuations on certain projects or companies? What helps you identify, okay, you know what, these are the, you know, the revenue, the income, the resources, or whatever it may be that helps you say, oh, these are the assets, right? Dial that in a little bit for us.
Valuation is not rocket science, Christian. You need to look at three things: growth, profit, and risk. That's it. If somebody tells you otherwise, call bullshit on it. Growth, profit, and risk. And find a KPI to understand the growth of the company, right? Could be how fast they're growing, how fast the profit is growing, how fast their production is growing, whatever that might be. Profit could be their gross revenue, could be their net income, could be whatever you want it to be. And then risk could be number of employees, could be their debt to leverage ratio, you know, whatever, however you want to quantify it. But it is always growth, profit, and risk. Let's take the example of Tesla. Everybody loves Tesla. Everybody loves Elon Musk. And I understand why. But if you think about it, as Tesla's price to earnings ratio, I don't know what it is today, but say it was around 1,300 or 1,400. So price to earnings ratio is say 1,300. What does that mean? Let's break it down, right? Price means their stock price to earnings ratio, to their net income, right? Income per share, net income per share, like as in the dollar they're adding to the bottom line, is 1,300 PE ratio. That means for every $1 Tesla adds to its bottom line, $1, people are paying 1,300 times for that $1, which means if a business, say, is making $10 a year in net profit, would you cut a check for $13,000 for that business?
Well, no, definitely.
So is Tesla overvalued? I don't know. I'm just asking questions here.
Yeah. So, and that's a really good example because I'm seeing in today's market, everything is, you know, obviously during COVID, it went, you know, everything just imploded and whatever. We all saw that. But obviously in your expertise in the value of real estate and the value of you know, these companies, are they overvalued? Are they inflated? Or is it to the point where you're like, well, they are where they're at because they are producing those kind of results? So tell us a little bit more. What's your thought on that?
So a good question to ask. So say Tesla. I would ask the question, help me understand, why is Tesla overvalued so much? Is it because of growth? Are people anticipating a lot of growth? Are people expecting a lot of profit? Or is it very profitable? Or is it so less risky? Or is it so stable, on the other words? It's not stable, right? I mean, it's a roller coaster ride. It is not exactly profitable because they're putting all the profits back into the company. So the reason why Tesla is so overvalued, 1,300 to 1 PE ratio, is because people are anticipating astronomical growth. Now, growth is a pie in the sky. Oh my God, it's going to go like this. Like 2 days ago, I was approached by a founder who's got 8 patents. None of the patents are currently making money. The company is zero revenue. It's pre-revenue. Yet his claim is that the company is worth $8 million. So, okay, great, good for you. Help me understand why. Well, because, you know, we can sell our patents to so-and-so FMCG companies and this company, and we could get all this revenue. I'm like, fantastic. Do you have any of that revenue today? No. Well, then why is it worth $8 million? Well, because we could. Okay, well, fantastic. How would you quantify that we could? Help me quantify that. He couldn't. So then how did you get to $8 million? People don't know. They just come up with a number. They have no idea. You start peeling the onion and people just fall through.
Mm-hmm.
So that's my
Well, see,
job. I just ask questions.
yeah, and that's a very interesting point here, Bharat. And I'm glad we're kind of talking about this because it's kind of abstract, but also, like you said, it's not abstract. It's very simple. So, for example, my dad and I went up to a place that we were looking at real estate, and we looked at this nice little piece of property, but we realized that the value that he was asking, what he was asking, the asking price, is definitely not the value of what the product is, of what the property was. And we saw that from experienced investors. So my question is, from your expertise, and you're looking around in today's society right now, in today's world, where you're starting to see a lot of, bubbles, if you will, and you're starting to see a lot of overvalue, how can you, as an experienced individual, how can you help our audience kind of explain, hey, this is what you should look at, that helps you identify, hey, this company or this product or this offer or this whatever is overvalued and you're paying too much for it? Because there's, just like you were saying with that company, there's going to be one idiot that pays $8 million, even though it never produced anything. So I'm curious on how it help audiences, our audience specifically, being able to educate themselves and to say, hey, you know what, this isn't, I'm not going to spend $8 million on this thing that, well, sure, they have patents. Does that make sense?
So I'll tell you the real trick on how to know what something is worth. All right. So when you go to buy a house, right? Single family home, your first house, your second house, what have you. When you go to a realtor and say, hey, I want to buy a house, the realtor asks you one question, and the realtor says, how much mortgage can you afford? It doesn't, he or she doesn't ask you where you want the house, how big you want the house, or how much worth or what should be the market price of the house. They usually ask you, how much mortgage can you afford? It's really based on that. And valuation of a reasonable business, I mean, let's not talk about Tesla or Rivian. I mean, that's stupid crap, right? I mean, that's all. Let's just say pie in the sky. But real businesses, right? So if you're talking about a $2 million, $5 million, $10 million business, this is how I look at it. So say if the business is worth $10 million, okay? I say that, all right, if I were to buy this $10 million business and I go to SBA or a bank saying, I need financing. First, the bank will say, I want you to put 30% down, 40% down, depending on what have you, right? So let's assume 30% down. Okay, great. $10 million business. I've got $3 million. I'll put $3 million down. The rest of them, Mr. Bank, you have to finance $7 million. Okay, the bank says fine. You take the $7 million and you take the banking terms. Usually a loan is anywhere between 10 to 15 years. Business mortgage could be 300 to 500 basis points above prime, right? You go to any mortgage calculator, right? Take $7 million, change the term to say 12 or 15 years, change the interest rate to 8 or 9%, and see what kind of monthly payment that mortgage you would have to pay, right? Now, see the cash flow of the business. If you need to pay a $50,000 mortgage a month, will that business generate a $50,000 mortgage cash flow for you to pay that mortgage? If yes, that business is worth that. If no, it's not worth it. Simple exercise. It's not rocket science. This is how I look at businesses. Now, as an owner, it's up to you. If the business is producing $50,000 and the mortgage payment is $50,000, but you can take that $50,000 to $80,000 or $100,000, well, that's all gravy for you.
Mm-hmm. That's awesome, man. That's awesome. So tell us a little bit about, because it's a very interesting concept right now, and definitely in this industry, because you're seeing a lot of things that are just, in my opinion, looking overvalued. You got real estate that's kind of all over the place. You got some certain stocks and companies that are kind of all over the place, but also you have the big infamous cryptocurrency, right? So I'd love to hear your opinion on kind of what that looks like. I know that I don't know if you may or may not invest into it, but I'd love to hear your valuation or your kind of input in regards to that.
Robert Kiyosaki says, when you come to a fork in the road, you take it. So why choose? Just invest in everything. So I invest in different things. I am not a big fan of cryptocurrency. I'm not maybe smart enough to understand cryptocurrencies. NFTs I still get. NFTs are a derivative of crypto, but it is almost like a domain name. Think of domain names, right? 25 years ago, when somebody said, oh, buy a domain name, you're like, what the hell is a domain name? Where do I go? What do I do? It's like, but now it's a household term. Crypto and NFT would be the same way, right? I mean, I think NFTs are here to stay because you create money out of nothing, right? I mean, you have all this content out there. Oh, Michael Jordan's first dunk at a Chicago Bulls game. They already have that clip as content. It's sitting somewhere owned by the Chicago Bulls or whoever owns that copyright.
Right.
But they haven't monetized on it. They make an NFT on it and they can sell it for $18 million. Well, they just monetized it. Mm-hmm. And the beautiful part about NFTs is you can set it up any way you want. So say Picasso, when he sold his paintings, he sold them for pennies on the dollar until they got really old. And by the time it was too old. But if you issue an NFT, say Chicago Bulls sells an NFT for $18 million, each time that NFT trades, Chicago Bulls gets a cut. Well, that makes sense. Same thing, I don't understand many times public markets. You bought a share from the company for $10 a share. Your $10 goes to the company. I bought your share for $15. You made a profit of $5. Well, I bought that share for $15 because the company was doing well, right? Mm-hmm. How did that award the company or reward the company for doing well? I don't get it. My $5 or a portion of my $5 to you, which is profit to you, should be going to the company, shouldn't it? Wouldn't that make sense? But it doesn't. NFTs is curing that problem. So maybe down the line, stocks will be traded like NFTs.
Very interesting. So with crypto as well, coming back to NFT and crypto, do you find that crypto is overvalued, and how would you put valuation on a very abstract kind of currency? Definitely in today's world, because I mean, I'm seeing people that sold their Instagram accounts for 100 G's, 200 G's, 300 G's, because the value of it was there and someone was willing to pay for it. And you have a lot of different abstract things like that. So, specifically talking about crypto, coming back to that, how would you, as an expert in this kind of niche, being able to put value on that, and how do you identify, okay, hey, this is too high, too low, because it is still very volatile, if you will?
See, the Instagram account, I still understand, right? Instagram account, if you've got 100,000 followers, I can say, all right, each follower is worth $2. I'll pay you 200 grand. Or, depending, say Gordon Ramsay's got a YouTube account, it's got 18 million subscribers or something. So I can quantify that. All right. Each subscriber is worth, say, $5, so his account is worth $90 million. I'm just making up these numbers, right? Mm-hmm. But with crypto, it's really a swag. I have no idea. Like, okay, why is Bitcoin worth whatever it is worth $50,000? I don't know. It has no cash flow, right? Bitcoin doesn't give you any cash flow. It's just because somebody is willing to pay $50,000. That's why it's worth $50,000. Well, that's stupid. I mean, what?
You said it, not me. Yeah, that's what I was thinking. Okay, and it's just nice to get that opinion a little bit. Okay, gotcha.
Hey, I just ask questions. I'm trained to follow logic. I'm an engineer, and I'm not in finance, guy. I sort of stumbled into finance, but in my head, and so I'm still an engineer, so I follow the logic. Yeah. He's like, okay, why is it worth 1,500? Help me understand. It's not making any money. Yeah. I mean, what's the Warren Buffett approach, right? If Warren Buffett is a sage of Omaha, and let's assume for discussion purposes, let's say he is the god of valuation of finance or what have you. Mm-hmm. The approach that he uses when he says that he reads annual reports, he reads the annual reports because in his mind, of course, it's a mini computer. He's doing a discounted cash flow or an income approach in his head that, okay, this company is giving me this kind of cash flow in the future. If I present value that cash flow, what would I pay for it? That's the calculation he's doing in his head. With Bitcoin, there is no cash flow. So what am I present valuing here? Nothing.
Yeah.
I mean, the same thing. Maybe I'm just not in that arena that why would you pay $100 million for a Picasso? I don't know.
Mm-hmm. Yeah, very, very, very interesting. I'm glad you're bringing this up a little bit. Now, let me ask you this, because let's kind of dial into a little bit of your story as well, because not everybody just jumps into valuations. And that's what do you want to do when you grow up? Oh, I want to be a valuation company, right? And some. So let's kind of dive in a little bit about that, and how did you go from an engineer to obviously building the successful company that you have now, and what were the ups and downs a little bit?
I did engineering in college. I went to Madison. And after graduating, I was bored of engineering. I was bored of Geek Talk. Engineers are boring as hell. I mean, it was just so conservative and boring. They make you've seen that, you've heard that song, little boxes on the hillside, little boxes made of ticky-tack. You've heard that song, right? Mm-hmm. And then that's what engineers are, like you put you in a box and this is how you're supposed to do and think. It's like, oh, bullshit. So I wanted a job in finance, but who's going to give an engineer in their right mind a job in finance? Well, I found one schmuck who became my boss. I just needed one.
Yeah.
So he gave me a job in finance and valuations, and I started from there. Turned out I was half good at it, so I stuck with it. And over time, they liked my work, so they kept asking me to do more complex valuations. And now I do the worst or the most complex valuations of all, startups, where there is no revenue, there is no income, no profit, no employees. They might have some IP, or they might have two guys in a garage with two laptops, but it's worth $18 million. How? I don't know. They asked me to quantify it.
So that's the tough part about your job right now, definitely in startups.
That's the fun part too. I mean, it keeps me employed because there are too many people who can do that. So I'm not complaining. I'm just saying the way it is.
Yeah, that's awesome. That's awesome.
As a rant.
Definitely. So tell us kind of like, what have you found, being in that space? Okay. Obviously working up and down and working with different companies, and do you get a little frustrated with kind of the industry right now because things are so overvalued, and you're like, well, where is this value coming from? Or you're saying, hey, you know what, let's just move on? Or tell us a little bit more about that.
No, I can't take it too seriously. I just tell people that, look, it makes no sense to me. And I'm just paid for my opinion. And the same way, just because I'm paid for my opinion doesn't mean my opinion is better than anybody else's. I'm just paid for it. Mm-hmm. But it does become difficult sometimes when somebody comes to you and says, okay, this company is worth $200 million. I want you to help support it. Mm-hmm. That's what I'm putting the cart before the horse, right? So instead, if somebody comes to me and says, hey, this is the company, can you tell me what it's worth? I'm like, yeah, I can help you. Mm-hmm. But if I'm doing a public company valuations, right? I mean, what is a public company worth? I mean, a Tesla is worth exactly like Bitcoin. Like, why is somebody paying so much for Tesla? I don't know, man. Somebody got a check for that much, so now it's worth that much. Mm-hmm. Mm-hmm. It's kind of like the prom queen would sleep with you when you've slept with a friend before. So I don't know. Sorry.
That's a great example.
I didn't know if your show was PG-13 or 17, but I just went for it.
That's awesome. Well, Bharat, I know you obviously have a YouTube channel, and you've been obviously putting out some really good little tidbits, really some great knowledge on education on this content here. So tell us a little bit about the YouTube channel, and as well as like what they can expect from that YouTube channel, because obviously sometimes this we can't explain this whole process, even though it is simple, right, to you, but some people are still probably not grabbing a hold of it. So where can they go to the YouTube channel to be able to learn your tidbits, and what's your ultimate goal with that content, what they can expect?
So you will appreciate the story. You're a marketer, and you're a online and digital marketer, and so I had spent crazy stupid money on marketing. I had spent about $200,000 of my money, which is a lot of money for me.
Oh yeah.
On marketing, on SEO, on funnels, on Google ads, on Facebook ads, on LinkedIn ads, and conferences and sponsorships. I mean, you name it, I threw money at it. Results were marginal. And each time I spent money on SEO or any of these things, these contractors and vendors, and then they're all the same. They would come back and say, oh, we need content. We need content. You haven't given us content. I'm like, you asshole, you took $18,000 from me. You should have told me that before you took the $18,000 that you needed content. I would have been making content for the last 3 months and paying you $18,000, but I would have had that content to help you by now. But no, they don't do that, right? They want their check cut first. And they know you, they know they got you by the balls because now you've already given them 18,000. Where are you going to go? So I made that mistake many, many times. You think you learn after once or twice, but I didn't. And then I said, you know what? Fuck y'all. I kicked all of them out. And I said, I'm going to just double down on content. And then I also learned that video content was king of kings. So I said, all right, the hell with everything else. I'm just going to create video content. So I just set up on this journey of creating video content, which was very scary and intimidating in the beginning. But, it's just one of those things. You start doing it and you keep refining your craft. So I never thought of myself as a writer or a creative type, but I forced myself into becoming one, and I feel I'm halfway good.
That's awesome. And so
that's the story.
Yeah, I love that story because it really does tell. I mean, I know my audience. I know that they've spent coaching and tens of thousands, just like yourself, that on marketing gurus, right? And they have no idea, and you're still stuck with something, not producing anything. Though, tell me, obviously you've got little tidbits of your YouTube content that you talk about, valuations, and how. What other content are they can expect with your YouTube channel, and kind of reviewing maybe deals or reviewing certain companies, or are you going to be able to say, okay, this is the data, these are the data points. What does that look like here for YouTube content there?
Well, by YouTube content, I'm trying to educate people I'm trying to educate them on what questions to ask. If somebody says this company is worth $80 billion, don't question the number. Never question the number, because then you're antagonizing people. Just say, why? Rivian's worth $80 billion. Oh, wow. I believe you. Please help me understand why. But if you say it's not worth $18 billion, well, whoa, how could you say that? You're a traitor.
Yeah.
But if you ask, oh, really? What's Rivian's revenue? Oh, 0. Oh, okay. So how does 0 revenue translate to $80 billion? Help me understand, please.
Yeah.
There's not going to be an answer there.
And what assets do they have? What kind of infrastructure do they have? Yeah, do they have IP?
No,
yeah.
You don't even need to go that far. Don't go that far. Just ask this question. Oh, 0 revenue. Fantastic. Okay, I'm sure they're going places. But how does 0 revenue translate to 80 billion? Help. I mean, 0 times 0 is still 0. Last time I checked.
Yeah, that's awesome, man. That's all. So what other questions would be a very good information for, like, hey, you know what, this is,
again, follow growth, profit, and risk. Always try to understand that, okay, growth. How are you estimating Rivian's or Tesla's growth? How are you estimating their profit and risk? So these are the parameters. Now you just figure out what metric to use there and figure out why it's worth so much or so little. So in my YouTube channel, I'm trying to explain exactly this, that, hey, what are the good questions to ask? Like my next episode is coming on franchises. Why are franchises worth high or less? Should they be worth high or more? Less. After that, I'm doing an episode on pre-IPO valuations, like companies like Rivian. I mean, why is Uber worth more than Ford? Ford's got 150 plants. No, sorry, they've got 400 plants, No, sorry. They've got 150 plants and 400,000 employees. 400,000 employees. Are you fucking kidding me? And they're worth less than Uber? Really? It's a 100-year-old company. They made aircrafts for World War II. I mean, seriously, come on.
Right. Right. Well, that's why I find it so interesting talking to you about this, definitely in this content, because, just like you were just saying, I mean, Uber, Lyft, you got all these companies right now that are just extremely valued. And even like you just mentioned, Tesla as well. I was always asking the same question. I'm thinking, what in the world? I'm looking at the profit margins. I'm looking at a lot of their, expenses. And it's like, yeah, it's cool. But also it's like, as a business, you can't run a business like that forever. And so there's got to be some massive changes. And yeah, they're doing great revenue and stuff like that. They're selling some stuff, but not to the extent, like you said, some of these 50, 60, 70, 100-year-old companies. And so it's just interesting to see what your perspective on it, not just regarding companies, but also like we were just talking about in crypto or and in real estate as well. So what's, tell me a little bit kind of, what's your goal? What's your next stage of life, if you will, where, okay, obviously you've been able to value very large companies, done very well for yourself. What's that next stage to scale your company and obviously do other larger projects?
I mean, I did my YouTube channel because it was fun and it was a means to an end. It was a marketing gimmick. Just so happens that the gimmick worked. It was, I spent all that stupid money, but it was all in experimentation, right? Right. As Edison says, I had 1,000 ways of not doing of a light bulb. But my next thing is I want to take my education, my YouTube channel mainstream. As I said, I would love to have my show on Netflix or Nat Geo talking about valuations, because valuations has really become a household term. 15 years ago, when I said I'm a valuation expert, they're like, what? What? Do you have a job? But now I say you're a valuation expert and people sort of go back a little bit that, oh, okay, you are a geek. I'm like, that's right, I am. Stay away.
That's awesome. That's awesome. So now what are the big projects are you working on right now and other companies that, I don't know if you're doing the Statue of Liberty and value in that, or, other things, other fun, creative, valuations.
No, I'm not, I don't do the priceless type of assets much. Okay. I have done them and I enjoy doing them. And once in a while I get something unique or interesting, like somebody approached me for the Port of Oakland and somebody owned a few dams. So I'm one of the few appraisers who can appraise anything. Most people wouldn't even know how to touch something that I would do on a daily basis. But that's why I enjoy my job, because every job is different. Some of the projects I'm working on, I'm helping a venture capital firm put a value on their 200 portfolio companies. So say if a venture capital firm invests $100 in their company, they need to show their investors what that $100 is worth on a quarterly or annual basis. So I help them. I'm helping a small chain of grocery stores. They aren't very big. They have about 40 stores in North Carolina, and it's being bought out by the franchisor, and the franchisor brought me in because they couldn't decide on the pricing. So my number is the deciding number. God bless them. So yeah, some interesting projects I'm working on nowadays.
That's awesome. So, because I know you did the Golden Gate Bridge, okay, and I know that does not, create revenue, but how did you value a bridge like that? What were some of your key rules, if you will, that it said, hey, this is what the valuation of this this item.
So again, fundamentals, Christian, don't change. Fundamentals stay the same. I just follow the fundamentals. And that's why I've been able to do so many oddball or weird things. And that's why I don't buy into things like, crypto, or that's why I ask those questions about Tesla or what have you.
Yeah.
Anything can be valued using three ways, right? One is what kind of cash flow this business or this asset gives me. And over the next 10, 15, 50 years, whatever you can estimate that cash flow to, and you present value that. That's one way of doing it, which is called the income approach. The second is called the market approach, which is generally how they value houses, right? So You have a house, well, they see a house that's just like your house in the same neighborhood, same square footage, same yard size, and see what that house sold for. And if that house sold for, say, $500,000, your house is worth $500,000. That's called the market approach. Well, the third way is, hey, what might it cost to rebuild that house today from the ground up? 400,000, $500,000, what have you. So that's the cost approach. So you can value anything if you can value its income, or if you can value its comparables, or if you can value its cost. Same thing with a bridge or an airport or Bitcoin or Tesla. It's all the same. So I tell people that think of me like a vet, a dog, a horse, a giraffe. It's all the same.
That's awesome, man. I really appreciate you sharing that, because I've got a lot of business owners that are in this audience that they do very well for themselves in e-commerce or something like that. But I mean, I've heard people where they, specifically in FBA or Shopify, they know how to produce the results, but they don't want to keep, a self-sustaining business or something. So they go out there, go from 0 to high 6 figures, and then they want to obviously value that company so they can say, okay, well, how much can I sell? How much can I sell it? I've been able to create it from the ground up, and they go out there and sell it, and then obviously go to the next person. So those that are in my audience that are looking at in that situation, reaching out to Bharat and basically having his team value your company, I think that would be a great asset. And so, Bharat, how can they find you? How can they reach out to you regarding your YouTube channel, your other content, your company? How can they reach out to you, bud?
Go to my YouTube channel or go to my website, and via the contact us button, our email is info@verystar.com. Just reach out. If it's a good fit, happy to help. If not, ask a question. If I can, I'd be happy to answer it for you. Education is really something I enjoy doing.
Awesome. Well, thank you so much again. And guys, that link and all those links will actually be right below in the description below. So you can actually take a look at that real quick. But again, thank you so much for joining, Bharat. Thank you so much for just bringing your value and bringing incredible amount of knowledge to our industry and kind of what's going on in the industry. So thank you so much, Bharat.
Thank you, Christian.
Have a good one.